My name is Alexandra Lang, and I will be your host today. As you can see, we are in webinar mode. So if you have any questions related to the content being presented today, please put them in the chat or in the Q&A. If you have any other questions, please use the chat to put them in. I've placed an attachment with today's packet of information, and other files will be sent out during the presentation as needed. Let's see.
And let me just chime in. Thank you, Alexandria. Wonderful introduction. So welcome everyone to this riveting session on how to read and understand audit reports. Again, as Miss Alexandria has so capably shared with you, she's the host, the technological whiz for our production today. We hope that you enjoy, but more importantly, and most importantly, I would say, hope that you learn something and take away something that will serve you in our Zion. And I'd also now like to go back to our host, Miss Alexandra, and she will present to you our keynoter, our main presenter, Miss Cynthia Gordon-Floyd. Alexandra.
Yes, as Director Wright said, our main presenter for today is my godma, Cynthia Gordon-Floyd, CPA and CFE of Willing Stewart Ministries, LLC. So take it away, godma.
Oh my goodness. I guess I'm going to take it away. Thank you, darling. Thank you, darling. Boy, I tell you, we talk about, the young ones being the church of the future, but she's my church of today because she is helping her godma today with her technical help. I have Sister Ashley here with me as well, helping as well from the 11th district. And so we thank Director Wright for bringing along her expertise as well, as she always does. So thank you to President McKee in his absence. He will be here soon. He's traveling to the general board meeting right now. And thank you as well to Director Wright, who is, she was just so helpful and so kind. As this training session was coming together, I was having trouble with what the title was going to be and all kinds of stuff. And she was like, it's gonna be fine. It's gonna be fine. And so thank the Lord, we're here. And we're just gonna do what we gotta do today. As Alexandra mentioned, I'm going to kind of roll forward. And so please put your questions in the Q&A. We've got a lot of content today. And so I really don't think I should stop for questions during the presentation. I need to kind of roll this out to you so that you can, have an opportunity to get through all of the information. And then if you can save your questions for the end, you can put them in the Q&A, and we, Alexandra and Sister Ashley are compiling them, and we will come back at the end to address as many of your questions as we possibly can. You're probably going to have questions. Also, Alexandra, if you have downloaded the full package for everyone, there's a package of attachments, all types of documents, along with a copy of the slides. I really would strongly suggest that you download that you print it out. You're going to need to be taking some notes in order to take in all of this information today. So get yourself a cup of coffee, get you some juice, sit back in your comfy chair because we're going to get rolling and we've got a lot to roll through. I want to apologize kind of in advance because the title of this training session doesn't fully reflect what I'm going to do today. I struggled with the title. I went back and forth with Director Wright about it, and I was like, okay, I give up. And so the title that you've got, we're going to do that, but we're going to do a little bit more than that as well. Because I don't think that I'm doing it justice if I don't start from the beginning of the audit process and really talk to you about just the process, how it gets started, how it goes, and all of those kinds of things. So we're going to just kind of start from the beginning, basically, and work through the audit and how to get it done and get it done correctly. So that's what we're going to do today. So the title sounds good, but I'm going to do a little bit more than that. So if you'll just ride with me, we're going to get through this together. So here we go. I wasn't going to insult your intelligence per se by saying we're going to start off with what is an audit. Because before I'm done with you today, you're surely going to know what an audit is. But what I did want to start off with is, what does it mean to talk about independence? What does it mean for an accountant to be independent? This is a very important point to make. And we really shouldn't be picking up an accountant without knowing basically that they are independent. And so the AICPA defines independence as the state of mind that permits a member to perform an attest service. Now, attest services is when an accountant is actually attesting to something. We're giving an opinion or something, or our conclusion on something. Basically, that's an attest service. Permits a member to perform an attest service without being affected by influences that compromise professional judgment, thereby allowing an individual to act with integrity and exercise objectivity and professional skepticism. Now, before I became a certified fraud examiner, and I should say a little bit about who Cynthia is. I'm Cynthia Gordon-Floyd. I'm a CPA and a certified fraud examiner. I'm in the 2nd district. Bishop Davis is my bishop, and I am at the First AME Church of Manassas in Manassas, Virginia. And so that's who I am. But when I became a fraud examiner, I realized how important this idea of professional skepticism is. I really didn't fully get it until I went through the fraud examiner training, because we as a CPA, I have to approach every engagement with professional skepticism. If I walk in the door without that skepticism per se, then I am apt to overlook something from the very beginning of the process. But professional skepticism means that I walk in the door saying that there's a very good possibility that there's a problem, basically, but that I'm looking for the evidence to support the conclusion that I'm going to reach, and that there is no conclusion without the evidence. That's professional skepticism. Whereas you're just being skeptical about everything. No, it needs to be integrity. We need to be objective, and we need to be somewhat skeptical. And you cannot be that if you're not independent. And so what are we talking about, this idea of independence? Independence in appearance is the avoidance of circumstances that will cause a reasonable person and an informed third party to reasonably conclude that your integrity, your objectivity, and your skepticism is compromised. Okay, what type of things would actually make an accountant appear to be not independent? I'll give you my first one, and this just comes from my own personal experience. I don't believe that any accountant should audit a client more than 5 consecutive times. Why do I say that? I really don't believe in accountants who have same client for 20 years. I don't believe that you can be objective when you have that same client over and over again. I believe accountants should be changed out about every 5 years. It's good to have that first 2 or 3 years together, because when we come in initially, we've got to establish a baseline, we've got to understand you. And then when we come back the second year or so, we've got more of an understanding of the operation and all of that. But after I come in over and over again, and you're doing things the same way or whatever, I start to lose that professional skepticism because I'm comfortable now. And so I do believe that it's important to switch out accountants over some period of time. Then also, basically, let's say your accountant is sitting at your dinner for Thanksgiving dinner. They're sitting at the table with your family for Thanksgiving dinner. Or they're too close of a friend to you, or they're too involved in your church or in your ministry and all of that. It's fine to call and ask questions. We're getting ready to book this accountant. What do you think? How do you think we should book it, or whatever? Those things are fine. But if they're too involved in what's going on, if they have responsibilities where they're designing your books and they're doing all kinds of things for you, that's too much involvement to be independent. Okay, and so at the least, if you want to keep this accountant for years and years, they should really only be involved in the very least when they're doing that audit. But I find it very difficult to be independent and objective after having a client over and over again. I can tell them I do a lot of consulting work. My clients, usually I tell them either I can be your consultant or I can be your auditor. I cannot be both. I cannot be both. And so this is the idea of independence is important. I want you all to think about that as you go along with this whole idea of selecting an accountant to do an audit for you. So now I want to start talking about these various types of audit, or I'm going to call them accountant reports, because they really aren't audit reports, that people get confused all the time with. They don't, and it's hilarious too, that they're totally confused. But for your purposes, you've got to know the difference, family. You've got to know the difference. So the first one I'm going to talk about is a compilation. And a compilation is nothing but the accountant compiling your financial statements in a manner that's consistent with GAAP. We're going to take whatever you give us, and we're going to put it in a format, basically, that is conforms with GAAP, but we're not doing anything with the content. So the pros of a compilation is that it's the least expensive thing that you can get a CPA to do as far as putting together your financial statements. And it can be used, and I have quite a few of my clients that use a compilation. The bank allows them to use a compilation to satisfy their annual banking requirements. And that's a good thing. You need to be smart enough to write that into your bank documents, but that's a whole nother training session. But right now we're talking about making sure that you can use that compilation, a cheap way, to satisfy your annual reporting requirement to your bank for your debt in order to satisfy that requirement for your bank. It also can be prepared, a compilation can be prepared by any accountant and even a bookkeeper. They have certain criteria that they are supposed to follow, but it doesn't require a CPA to do a compilation. Why? Because you're not getting much, okay? That's why, basically. Cons, it provides no assurance. Not only does it provide no assurance, it really, the letter that goes with it is a complete disclaimer of any responsibility for the numbers, totally. And it can make a mess look pretty. What do I mean by that? It literally, because the accountant, it takes it and kind of cleans it up and makes it look all nice in a nice little report, it could still be a hot mess. It could still be good and wrong. The accountant takes no responsibility whatsoever for the content of what you're giving them. So that's something, isn't it? That is something. This is an example, some excerpts from the opinion letter, or really the letter, that's really not an opinion letter, that goes along with the compilation. And here's what this letter says that goes along with this compilation. We did not perform an audit engagement or a review engagement, nor were we required to perform procedures to verify the accuracy or completeness of the information provided by management. Accordingly, we do not express an audit opinion or a review conclusion or provide any form of assurance on the financial information in this package. And this is the new report now, because this didn't used to be in the report. These letters come directly from the AICPA. This final sentence got me when I saw this new report that's effective with the December 31, 2020 financial statements. Readers are cautioned that the financial information may not be appropriate for their purposes. Can you believe that we're putting that in a letter? So I have done compilations for clients. Basically, that's what they require. You put it together. I put the letter on top of the report, and they come back and say, whoa, 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 whoa. What is this thing you're putting on here? You're saying that you didn't do anything with our numbers. You're saying nothing. You're kind of saying, you're washing your hands of this. And I'm like, that's exactly right, because I didn't do anything with your numbers. I'm simply just putting together for you so it can look kind of cute, whatever. But this letter is going to go on top of it if you're going to get it from me. And I'm simply saying, I didn't do anything in these numbers. I don't know if these numbers are right or they're wrong. I'm just putting it together because I was asked to put it together. So that's what a compilation is. Okay. And I've had many clients that actually asked for a compilation and were shocked at the letter that they received that came along with those financial statements. It really was funny, but I tell you, I felt kind of bad from that, like, wait. Whoa, 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 whoa. And so the next one we're going to talk about is the review report, okay? And the review is an engagement that has to be performed by an independent CPA. but it includes primarily analytical procedures to verify the financial data that we received from management. We're going to verify it, and we're going to make inquiries of management. So there's going to be variance analysis, there's going to be ratio analysis, but and the pros of it is that it's less costly than an audit, but it can be quite costly because it takes a lot of analysis on financial statements to even get to the point where an accountant feels comfortable enough to put a letter on top of it. You got it. So that's why that's the time that goes into that is what can run the bill up for you for a review. So for what you get, a review costs too much money, but anywho, it can be used to, of course, meet your annual banking requirements. It does provide a limited assurance, not much, but there is enough analytical work that goes into the process, basically, for an accountant to say, well, I think that pretty much there's no material mistakes in the financial statements. It must be performed, as I said before, by a CPA, a review engagement. What are the cons of a review? As I said before, it's significantly less in scope than an audit, but it can be almost as expensive as an audit because of the time that it takes to do the analytical review and ask the questions of management and do all the things that need to be done. And it does not review any internal controls. It does not assess any fraud risk whatsoever. It does not test any detailed transactions. Therefore, there is no opinion at all with the review engagement. So let me show you what the review report actually says. Here's a review report. This is actually an excerpt from it, basically. So here's what we're saying, the accountant, after we've done the review. We have reviewed the accompanying financial statements of I Love Jesus AME Church, which comprise a statement of financial position, yada, 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 cash flows, yada, 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 then end it. A review includes primarily applying analytical procedures to management's financial data. I do want to go back and say, every time we do these, we're simply taking the financial statements from management and we're verifying them, okay? Accountants we're not supposed to produce the financial statements. We are supposed to receive the financial statements and analyze them. So we're reviewing the information we got from management, basically. A review is substantially less in scope than an audit, and the objective of which is to express which an audit is the executive's expressing an opinion regarding the financial statements as a whole. Accordingly, since we did not do an audit, basically, we do not express such an opinion. So with a review, you're not getting an accountant's opinion, you're getting the accountant's conclusion, okay? So you're not getting an opinion at all. And based on our review, we are not aware of any material modifications, and that word material is meaningful. Material can kind of depend on your level of risk that you're willing to take on, but materiality can be anywhere from 2% to 5% or something of that nature. It is based on the accountant's objective view once they review the documents that they get from you initially, your policies and procedures, how you carry out your business and all of that. Then they determine, based on how you're conducting your business, what is the level of materiality for this particular engagement. Okay, so we base that on what we receive from you, and materiality may go very low if it appears that your procedures are lax and not well done. It could be materiality can be higher if you're very well buttoned down organization and things are moving very well. So in the review, as I said, you're getting a conclusion. So we're not aware of any material modifications that should be made to the accompanying financial statements for them to be in accordance with accounting principles generally accepted in the United States of America, which is another word for GAAP, generally accepted accounting principles. So in a review, you're getting no assurance per se whatsoever, except that the accountant did spend time with your financial statements. They did analyze, they did look at your trends, they did look at your ratios and all of that. And it appears as though the financial statements are materially correct. But that also means that whatever that materiality amount is, all kind of errors could be in regarding that. Okay, and so that can be a big deal, but that's what that review basically is telling you. So now I bring you to this sheet because that's really the most that I'm going to talk about compilations and reviews, because today we're really talking about audits. But what's important, I had to lay the groundwork for that, because basically you have to know that all of the reports can look the same from the accountant. On my left, basically here, a compilation report, you can see this is the name of the church, compile financial statements. So there's a compilation behind this cover report. Here, review. All this says is review financial statements, but it looks exactly the same as the cover page for the compile financial statements. And then to the far right, it says audited financial statements. It's the same cover page. And this is why so many people get confused by what they're getting. They just don't get it. The fact, but you all now know that this cover sheet may look the same except for one word being changed, but what's behind this cover report is distinctively different. And it's important for you to know that, because a lot of times people will walk around, oh, I've got my audit report and it's clean and everything is good. Well, you know what? It may not be. And it may not be an audit report. It may be a review report, or it may be a compilation. Without you actually seeing the exact report, you really don't know what you got. But as you now know, friends, that there is a difference between these different reports, but they can look on the surface to be exactly the same. But you gotta go deeper. You gotta dig deeper. And I wanted to mention that before we got away from discussions of compilations and reviews. Okay, so now we're getting ready to start talking about audit. And we're going to get into an audit report and all of this, because this was so important that we kind of get ourselves together with what that basis is. So now let's talk about what an audit is. It is an examination of your financial statements by a CPA to determine if they are materially correct and conform to generally accepted accounting principles. Now, the pros of an audit. Basically, it reviews your internal control. That is how well you are segregating your duties, how well people are, who's signing checks, who has custody of your assets, how are your assets being handled. And it assesses your fraud risk. What's going on in your organization? How are things being approved and processed? And how are dollars moving and all of the above? It tests transactions. They're actually going to go in, pull your transactions. It is a statistical sampling of transactions. An audit does not review all of your transaction. They're going to select some statistical, they're going to make some statistical choices and decide what transactions to pull. And then they're going to pull those transactions and look at the supporting documentation related to it. Okay, and that's very important, because until you get to that level of review of transactions, you really have no idea what's there, what could be there, what should be there, what might be there, basically. The review of operations and transactions is by a third party. It's always important to have somebody independent looking at what you do. And so that is a value, a good value of having a CPA to do an audit for you. Also, they're independent and they are somewhat, an expert per se in internal controls that can help you understand what things are not right and how to fix those things. And then also, during an audit, the auditor is going to directly confirm your receivables, your payables, your cash, and your debt. So when I say direct confirm, if receivables, if someone owes you money for any reason whatsoever, the accountant is going to send out a letter to them confirming that to them directly that they owe you the money. They have to send that back saying, yes, I do owe them $30,000. That is correct. I'm signing at the bottom, I'm confirming that that's correct. Payables as well, invoices that verifying your invoice file, that the monies that you say are owed or that what you say is paid and all that, confirming that that's for real. They're going to confirm cash. I've had recently people ask me, Cynthia, is it possible, for someone to issue an audit report and they didn't know how much cash was in the bank or hadn't verified the cash, I'm going to tell you right now, no, you did not get an audit report without cash being verified from bank statements and other third-party statements. No accountant did that. If you had a real audit, and if that occurred, the accountant verified how much money was in the bank via bank statements, and not just at the end of the period. They verified cash in every period that was covered in the audit. Same thing is true of debt. How much is outstanding and all of the above. They're going to verify that with the bank. They're going to look at all of your transaction documents regarding that. Everything in an audit report of that nature is going to be verified. And so you don't have to wonder if you get an actual audit report, whether those things have been done. I can assure you that they have been. The cons. An audit can be very expensive, as you see, I'm talking about sending out confirmations and verifying everything. There's a lot of time that goes into doing the work of actually verifying basically all of the things per se that need to be verified in an audit. There's a lot of time that goes into it. So it can be very expensive, which is why it sometimes is just totally prohibitive for most of our churches to be able to do so. And that's understandable, but I've got a solution for that. And we'll get to that toward the end of the presentation. And it's assumed to provide more than it does. Many people do not understand the fact that how many disclaimers are in an audit report. Because honestly, even though we're testing things and all of the above, there's only so much can be done with a statistical sample of transactions. Okay, so now let's hop on to the next one. And let's go a little bit further with this whole idea of the audit process per se. The audit committee basically is something that is really critical to the process here of an audit. It's very, 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 very critical to the process. And it's something that we don't seem to use very well. The Connection Learning Organization is using, we have an audit committee. It's led by Brother Jeff Presley out of the 3rd District. He's a great brother man. He is. That committee serves the purpose that it's supposed to serve. An audit committee is really key to the idea of having an audit. Here's what the audit committee does. It's a vital role. They stand in between the financial person who has financial persons or group of individuals who have been doing the daily transactions, the ongoing transactions, and the auditor. Basically, they are going to serve the role. This committee consists of at least 3 persons, and they're just going to oversee the audit process. They should be independent persons. They should not be part of your Commission on Stewardship and Finance. They should be not people who have, they should not be your financial secretary. They should, they could be some stewards ideally, but probably not, because the stewards are responsible for the finances of the church. They need to be individuals who are totally independent of the financial process. No vested interest or whatsoever. They're just simply independent of the process. But they do need to understand financial reporting. They did have some financial reporting expertise, ideally, and not all of them, just some of them. Or they need to be people who really understand how the church, the ministry, the organization should run. Okay, what are the things that it should be doing? So knowledge of the policies and the processes of the audit entity, basically. But these 3 persons, 3 or more persons, basically serve a role of standing in between, just to provide more transparency and more accountability to the process. And so this audit committee now, their role is to contact the auditor, and ideally, you want the audit committee to select the auditor, okay? Because it probably is not good. If something is going on that should not be going on, the financial manager, should probably not go and pick the auditor. I might pick one of my friends. I might pick someone who is not going to, tell it like it is or so, or whatever. And so if that's the case, then maybe it's better for the audit committee to select the auditor and arrange for the engagement letter to be executed. We're going to start talking about engagement letter in a few minutes. Meet with the accountant initially, basically, and establish clear reporting guidelines. The accountant should understand that they're going to report to the audit committee, not to the financial person that their financial work is being audited. They're going to report to the audit committee, okay? Meet with it and establish clear reporting guidelines, and then the audit committee should voice any concerns. If the audit committee has concerns about certain parts of the environment, the reporting environment, certain things that are being done that they don't like, or they're concerned about something, voice that to the accountant at that time, okay? It's important that you do that, because you're going to see later on, we're talking about the fact that you have to disclose these things to the accountant. And then the audit committee hands the audit over to the finance team. Basically, they tell the okay, now accountant, we've established reporting guidelines. Now go ahead and work with the finance team and get the audit done. The audit committee does not sit in the middle. Don't be a bottleneck. Don't be in the way because you don't know the details, and let the finance folks go ahead and answer the questions and get the work done. You come back in at the end and receive the final report from the auditor. You ask all your questions. You make sure you understand the audit report and you have a full understanding of it. Take the time to do the work. Don't take this job to have a title. Take it to do the work. So come back and review it and understand it directly from the auditor. And then, ideally, the audit committee should present the audit findings to your governing body, not the person who is your chief financial officer, financial secretary, head of stewardship finance, treasurer, whatever you call that person. That is not ideally the person who should be presenting the report. The report should be presented by the audit committee. The audit committee comes to your official board. They come to whoever your governing body is. There's probably general board members on here as well. You basically go to that board and you give the report. You don't have to know all the details, although the auditor can surely run you through it, and the person that is in charge of finance can run you through it too and help you understand it. But you should be the one doing it. This is the time for that financial person to be able to sit back. And you're standing out there in front of them now, and you're saying, we basically had we just finished our audit. I'm coming to you as the chair of the audit committee, and here are our reports. And these, this is the conversation we have with the auditor. Things are going great. They said we're doing this well, we're doing this well. This can be improved. We're going to work on that and all of that. But you're now standing pretty much, in place of that financial person, because by doing that, that audit committee is going to take on this fiduciary responsibility of oversight. You're going to be the communicator. And so now it's obvious to those who are listening to the report and receiving the report that there is an independent process in place, a very independent process in place, and that it has been reviewed and that any errors or issues have been addressed to the audit committee, not possibly to the person who may have a reason to cover it up. If they report to the person that the auditor reports to the person that does the financial statements, there's every possibility that they can explain away things that the auditor thinks look suspicious or doesn't look quite right. Basically, if there's no in between there, basically, then there is no way to correct problems, right? Who's going to correct it? If I'm reporting to the person who caused the problem, okay? So we have to have audit committees in place so that there is a border, there's a boundary, and that there is a place for an auditor to report to if there is an irregularity that needs to be discussed. Because if you report to the person who may have caused the irregularity, who's going to correct it? And who's going to know about it? And who's going to fix it? And so you see, our lack of putting these types of things in place are causing things to get out of order because we don't put those boundaries in place and we don't establish the way that problems, errors, and issues can be addressed and dealt with. We're not doing that. So we have to take care of those kinds of things. And we need this audit committee to be functioning across the entire church, From beginning to end, there should be audit committees constantly in place to make sure that the work of the auditor is being independently reviewed, and if there are issues, that those issues are being addressed. And it's very difficult to do that without a functioning audit committee. Okay, now we talked about the audit committee actually going out and securing the engagement letter with the accountant. Now, here's what's important. Let's go. We're going to take some time on this idea of engagement letters, because this is really important. It really is, because the engagement letter is designed to spell out what the accountant will do and what the accountant will not do and will not take responsibility for as well. These engagement letters are given to us by the AICPA. There are 25 different versions of the engagement letter, all kinds of different things that can be added and taken away based on the type of engagement that you're entering in. And so, the wording of them is very consistent. You will find that no matter what accountant you're dealing with, if accountant is smart, they're dealing with the canned letters that come directly from the AICPA, because we simply have various reporting requirements. And I can tell you for a fact, my liability insurance as a CPA is based on these engagement letters, using engagement letters. I am required to do so because it lays out what my responsibilities are and what things are not my responsibility. And it has about five parts is what the engagement letter has. It has an introduction, so pretty much introduction lays out what you've asked us to do. It's going to tell you what the responsibilities are of the CPA. And then it's going to tell you what your responsibilities are regarding it. And it's going to talk a little bit about the audit report, and then it's going to talk about fees and other matters. And so that's what the 5 pieces are. So let's talk about the engagement letter for an audit and the things in this engagement letter that you just really kind of need to know. Yes, you really kind of need to know it. The objective of our audit is to express an opinion about whether your financial statements are fairly presented in all material respects. That means that we can miss stuff that's immaterial and get away with it. In conformity with accounting, general GAAP, whatever, our audit will be conducted in accordance with auditing standards and guidelines that are accepted. And it will include tests of your accounting records and other procedures we consider necessary to enable us to express such an opinion. If our opinion is other than unqualified, and I'm going to take you through the types of qualified types of opinions. Unqualified means it's a clean report. We have no issues whatsoever, and everybody assumes that they're going to get an unqualified opinion. They assume that going into the audit. We will discuss the reasons with you in advance if we cannot issue an unqualified opinion. And if for any reason we are unable to complete the audit or are unable to form or have not formed an opinion, we may decline to express an opinion or to issue a report at all as a result of this engagement. So we're telling you right here that we hope to give you an unqualified opinion if the facts support that. And we're going to talk to you, and if we're not able to do so, we're going to talk to you about it. We really are going to have that discussion with you. But if we can't come to an agreement, and if we can't get satisfied to the point that allows us to issue this report, we won't issue a report at all. If for any reason we are unable to complete our audit, you don't give us everything we need, or the things that we require, you're unable to provide us, basically, and we cannot form an opinion, we may decline to express an opinion at all. And I'm going to show you the different types of opinions in that. So we always assume that there's going to be an opinion, but we're telling you we'll come up out of here if there's something that we find out is wrong. This is also out if we find that as we're dealing with management, that there is some kind of issue, that we are being precluded from doing our best work. There is some kind of integrity issue. There appears to be problems going on. We can actually pull out of the engagement if we sense that things are not correct, because we can't be involved in things that are incorrect. Once we put our audit opinion out there, we are liable for certain responsibilities. So we're telling you here, we may opt out and run for the hills on you if things don't look right to us, or you're not able to satisfy our questions. Here's another excerpt to tell you our engagement cannot be relied upon to identify or disclose any financial statement misstatements, including those caused by error or fraud, or to identify or disclose any wrongdoing within the entity or non-compliance with laws and regulations. We cannot guarantee that we're going to find everything that's wrong, and we're saying it to you in our audit engagement letter so that you know in advance. You can't sit back and say, oh, it was audited, so the auditor should have found that problem. We're telling you, nah, we're not able to find everything, and we will not take responsibility for finding everything. But if we find something, and we are not going to know every law that applies to your business per se, we should. And that's why you should get accountants who have done the work in that industry before. If it's a church audit, if it's a nonprofit organization, make sure the person has done churches before, understands, because every industry is different. And having an accountant that does not understand your industry is a problem. It just means that it's going to be less useful to you than it should be, basically. But we're saying if we find something, however, we will inform the appropriate level of management. That's why this appropriate level of management, that's why you need an audit committee. That's what I'm saying. That's what I'm saying. That's what I'm going to say again. Of any material errors and any evidence of or information that comes to our attention during the performance of our review procedures that indicates fraud may have occurred. If it comes to our attention, we see it. And I'll tell you how this process works. If we see something that looks iffy to us, what's going to happen to you is that we're going to come back. We've already given you a list of things that we're selecting. We're going to come back and we're going to ask you for more information of this type of transaction. I'm just giving you a heads up as to what this means. We'll give you a little heads up as to we're going to ask you more. We're going to see more of it, and we're going to verify it to the best of our ability, to the point where we are now convinced that there is a problem here. Then we're going to bring that to you. But we're going to continue to test because, of course, we're going to assume initially we may not fully understand. That's why you gather more evidence to become more sure. If at the time that we come to you with something that we believe could be fraudulent or whatever, we actually have something in our hands that we are pretty sure of before we will make that type of claim. So, but if it comes to our attention, we're going to bring that to your attention, basically, and we are required to do that. And we're telling you that in audit, but we're saying we may not be able to find everything. And another excerpt, because the auditing engagement letter is probably 5 or 6 pages long. Here's another excerpt from it, basically. And the risk of, and you see all this other what to do with fraud area, we already talked about that per se. The risk of not detecting a material misstatement resulting from fraud is higher than for one resulting from error, as fraud may involve collusion, forgery, intentional omissions, misrepresentations, or the override of internal control. Here's what we're saying here. It is far more likely that we will not be able to detect fraud than we will be able to detect just an innocent error that occurred, because anyone who's committing fraud is going through the effort of possibly colluding, and that means there's more than one person involved, basically, in perpetrating a fraud. Colluding together, which makes it far more difficult to detect. Forgery, so somebody forged a name on the check. Well, the name on the check is the name that's supposed to be on the check. It's just that person didn't sign it. An accountant is not going to be able to tell that unless the signature looks extremely different. It's unlikely that it does. So forgery, intentional omissions, things that are left out of the financial statements. We cannot test what is not there, okay? And misrepresentations, things that we're going to be told. We ask about procedures and how things are supposed to be going. We're told one thing, but something else is actually going on. Well, we have no way, because we are an external auditor, to know whether that's true or not, especially if we can't find evidence that is contradictory to what we were told. And so these are the types of things, or the override overriding internal control, you're supposed to have 3 people in the process of, getting a voucher, approving a voucher, cutting the check and all of that. And someone is in the process thwarting that. It's not going to the second layer of signatures, actually being skipped over and gone to layer 3. We're not going to be able to tell that from the documents that we're going to pull, that someone is actually overriding the procedures that you say you have in place. And so all of these things produce a higher opportunity for things that are not caught during an audit, basically, than errors and omissions and things like that that happen by accident, which a lot of times can be caught simply because they fall out of norm per se. Okay, and so because of that, that's kind of how that rolls. And so this is an important point, but what is important to also note is this is in the engagement letter. Okay, we think that we can hold the accountant responsible for these kinds of things, but it is in the engagement letter. Okay, and we're telling you this up front, but you got to read it. You got to know it when we start doing it. So let's talk about the types of audit opinions. And actually, and Alexandra, if you can drop into the chat box the compilation report and drop in there the review, I think the audit opinion letter. Drop both of those into the chat box. Those, you already have them in your full package, but these are just individuals. You want to just kind of look at them real quick to ask a formal question or whatever. Feel free to drop those into the Q&A at any time. So, types of audit opinions. Okay, unqualified. We've already talked about that. Your financial statements are fine. They are free from any material misstatement, and we're going to issue an unqualified opinion saying that you have a clean audit report. A qualified report means that there is one or more material issues that the accountant is not satisfied with in the statements. And they are going to say, all of the financial statements look fine, except, and that's the qualification, except this and this and this is not done according to GAAP. This is not here. I will tell you now, qualified opinions, no one wants a qualified opinion. No one, because what happens is, what the financial statement recipient recognizes is that the accountant is going to bring the problem to you. And as we looked earlier in the previous slide, they're going to bring it to you and say, this is a departure from GAAP. And in order for us to issue an unqualified opinion, this needs to be reflected like this in the financial statements. That came to you. And then you can just say, oh, okay, that's fine, Cynthia, we can make that change. Or you can say, no, I want it to look like this, because, you surely can run into places where people want their financial statements to look a certain way because they're trying to make people think that something's going on and that it's better than it is and all of that. Well, we accountants, we're not having it. We're just not having it. We have a responsibility. And our responsibility is not usually, even though the person paying us is the one we're talking to, our responsibility is to the third party. It's to the person the persons who will be reading these reports, who are relying on us to give the facts and to reflect it the correct way. And so these conversations about qualifications are happening with the auditor, and the auditor is trying to work it out with you during the audit process. And so if we get to the point where we actually have to issue a qualified opinion, then that meant that you put your back up against the wall and you refused to make the changes that we asked you to make. And we're going to tell it. We're just going to tell it. That's what we do. We're going to tell it. And so getting a qualified opinion says to a third-party sophisticated reader, there's a problem here because management refused to make the change that the accountant requested. And there's a problem here. And so that no one wants a qualified opinion. We will hold that over your head to get things reflected the way we want them reflected. As I said, the financial statements belong to management. We are simply trying to evaluate and review your financial statements, but we really are not the owners of the financial statements. You are. And so we have to come to you with changes when we're going to change how you reflect the way that certain things are reported. A disclaimer. That means, now I have seen a disclaimer report, because it seems kind of odd that somebody would pay for an audit and then end up with a disclaimer report, but I've seen this. This means that we are unable to verify something that's material in the audit. And it's the type of thing that until we verify it, we can't issue a report at all. And we kind of talked about this before. If you give me cash balances, but there aren't bank statements to support those things, that's a disclaimer. If I can't confirm receivables, if I can't go count your inventory, the inventory, things like that, if I can't confirm things that are required per se, I'm going to disclaim. I'm not going to do an opinion at all. Not at all. And so that's what and so you would think that nobody ever gets to this point, but sometimes they do. Sometimes there's a governmental requirement to have that audit done, and there's certain things that may not be available. And it's not even the fault of the entity, basically. It's not even their fault. They simply couldn't get the information correctly, and the auditor couldn't issue the report, but the government entity required that it be issued. So disclaimers happen. Now, adverse opinions, I've never seen an adverse opinion. Never. I know they exist, but who would spend the money and go through the effort to end up with an adverse opinion? What is an adverse opinion? An adverse opinion says that there are so many errors and irregularities in these financial statements that are material problems. You can forget it. Not only, and I'm not going to disclaim it, I'm going to say they're just a hot mess. And so when we write the audit opinion for an adverse opinion, we're saying the financial statements stink. And that's what we're telling you. I don't know who would pay to have an accountant go to the trouble and then come up with that. But that is the type. I've never seen an adverse opinion. I've seen disclaimers, but never an adverse opinion. But so everybody's trying to get an unqualified opinion. Okay, so now we're going to get into the audit report itself. So what is contained in the audit report? There's going to be an independent accountant's report. Independent, don't forget, we talked about what independent means, and that's their opinion letter. There's going to be a statement of financial position, and that's what most people refer to as a balance sheet, but in the nonprofit world, it's called a statement of financial position. There's going to be a statement of activities, and that's what it's called in the nonprofit world, but you may know of it as an income statement. And then there's a statement of functional expenses. It's an optional statement, but now I think the CPA has made it a required statement. I'm not even going to show you a copy of it today. It's not all that interesting, and I knew we weren't going to have the time for it. So I didn't even give you a copy of it today, but it's just a statement of functional expenses across the program services. And so I'll show you what that is, but I'm not going to go over it today. Statement of cash flows, and that's important because that's going to tell you where your money goes. And so, and then the notes to the financial statement. So these are the components of an audit report, okay? And so now let's go through these components. So here's the audit opinion letter, basically. This is, we've gone through a lot of the wording that's here already. Basically, this letter has now changed, and I gave you a copy of it in the documents that you're downloading. This letter now, it used to, as you can see, it talks about manager's responsibility, auditor's responsibility, and then it gave the opinion at the very bottom down here. Now the new letter is going to have the opinion at the top. And it's going to, it's going to introduce the financial statements to you. Basically, then it's going to tell you what the opinion is of the auditor, and then it's going to tell you how that opinion was reached. The CPA is going through more trouble and more effort to try to be as clear as possible about the limitations of an audit and what our opinion really means when it's all said and done. And so that's what this audit opinion letter looks like, and that's pretty much it. That's what it, I hope you can see that. And then here's a statement of financial position. And so we're going to spend a minute. I cannot teach you today how to read financial statements. I don't think we have time for that. But I am going to tell you the things that I want you to look at and pay attention to on these financial statements. And so this is our statement of financial position, our balance sheet, basically, of the I Love Jesus AME Church. And you'll see at the top, I want you to just pay attention to, first of all, I want to say that when you receive a set of audited financial statements, it should not be new. These should be numbers that you've already seen, either in an official board meeting, at one of your quarterly board meetings or semi-annual board meetings. You should have already received financial statements for the end of your fiscal year, fiscal or calendar year. You should see that. Keep in mind, the auditor took the financial statements that were prepared internally, and we simply are just put in a different format, but the numbers should be very familiar. And if they're not, that's the problem. So I want you to look at the amount of cash you got in the bank. This is cash in this first section, this, general fund, this savings, this is deposits that were probably somewhere, whatever, but total amount of cash. Now, when you saw your internal statements, if you didn't see $300,000 and you saw $400,000 or something of that nature was given to you, and now the audit report shows $300,000, you need to be asking the question like, what happened? Because what that means is the accountant has corrected what you were previously being seen. Money, checks outstanding or whatever, whatever, but you really want to know why you were being told one thing and the audit shows something different. Be familiar with the basic numbers. When it comes down to property and expense, I'm not going to say you don't need to do much at all with that, but then I want you to hop right back down here to these liabilities. Know for a fact how much money is outstanding. This section on current liabilities, these are the bills that are due to be paid within a short period of time. You're going to look at this amount of money in comparison to how much cash you got to tell you how well your church or your organization or your entity is doing. It's important to make those kinds of comparisons. And then loans, basically. Long-term debt, there's a PPP loan out here and long-term debt and all that kind of stuff. Look at how much is outstanding in comparison to how much money you have and all of that. So I won't go too deep into this right now, but I do want you to just pay attention to those types of categories, okay? That's very important to do so. Okay, now statement of activities, our income statement. So we know basically that this is how much money we brought in for the year. Now on the balance sheet, let me go back to the balance sheet real quick. On the balance sheet is a document that constantly rolls forward. Things only fall out off of the balance sheet once they are used up, okay? But they come on, assets come on, the land and buildings, things come on, they stay on until they are used up. So the balance sheet is a rolling document where information is constantly coming on and going off, coming on, going off. Whereas your income statement, this is 12 months encapsulated into one report. And at the end of that operating period, whatever that fiscal or calendar, everything on this statement of activities goes back to zero. And you start over again on the next year. It goes down to zero. What's left over goes over to the balance sheet to accumulate. Hopefully you made some money or were able to retain some cash. Basically, that goes over the balance sheet. And then you're back with this statement on the next year, starts at zero, and we start building back up. So as you look at your statement of activities, okay, then what you're seeing basically is what occurred in the year, how much money you brought in and how much you spent out, okay? And for nonprofit statements, they're going to be in categories. Program expenses, that means that every nonprofit has a mission, basically. We are doing, there's something that we've identified that we're doing. We're saving souls, we're feeding the hungry, and we're clothing the naked. That's what we're doing. That is our program. That is what we are about. And then there are support services, the services that it takes in order for us to carry out our program. And that's how the IRS defines nonprofit work. It's a program of nonprofit needs that they're satisfying, and then there's the support services needed for that program to be carried out. And so that's how the financial statements are reflected. So just make sure, once again, these numbers should be familiar. If you thought you guys made $200,000 last year, then the audit report should be the same thing that you were expecting to see. It shouldn't be a different number, because if it is, that means that your accountant had to make a lot of adjustments to get the numbers correct, and that shouldn't be happening. Statement of cash flows. This one is important. As I said, I'm not going to try to teach you every piece of these statements, but what I do want look at. You can kind of, not spend a lot of time up here. Depreciation is added back because it's not cash. But what we really want, I want you to just kind of probably not pay a whole lot of attention to what's going on up here. Head yourself right down here. And the question is, how much money, this is cash that did not go on the income statement that got spent. How much money did we spend on buying stuff, property and equipment, new AV system, new screens, all that kind of stuff that we've all had to spend money on in the last 2 years. And how much did you pay off on your long-term debt if you have debt? How to those two things, look at that. And once again, these things should be somewhat familiar, okay? We can do another training session another time to go through how to really read financial statements. But at least if you take those notes, I want you to at least be able to hop to the important stuff on those statements. Now, this is one page out of the notes to the financial statements. Usually the notes to financial statements, 5, 6, 7, 8, 10, 12 pages. It could be however many long, depending on how detailed and how much needs to be disclosed. But what's important about the notes, okay? Now you see here, and I don't think it's from the same audit, but you see here, this note is note 2, and it's about property and equipment. And it's telling you the details of what's in property and equipment. So let's hop back to the balance sheet here. And you see this property and equipment and vehicles, and it has, these categories per se of what this, well, the notes are going to tell you what's in those numbers. And so if you really want to know what's going on with an entity, you've got to read the notes of the financial statements. And let me go back to here. You'll see at the bottom here, it says, see the independent accountant's report and the accompanying notes. The notes are extremely important because the notes tell you the details behind the numbers. And so as you read the notes, it's going to tell you all those details that you might want to know about the entity that you are involved with, that you are serving on the board for. And it's going to tell you, and we're going to tell you everything. You see down here in note 4, it talks about the long-term debt. We're telling you exactly when they entered into the note, how much the note was, what the interest rate is, what the monthly payment is. And there's also a note that's going to be added in that's going to tell you how long it's going to take them to pay this note off and how much in the next 5 years is going to be paid off in principal of that note and all of that. We tell everything. Accountants, we don't keep your secrets for you. In the notes, we're going to tell everything. And so if anyone wants to really understand, per se, what's going on with the financial statements, and you may not fully understand the financial statements, go back to the notes and just start reading. We try to put in really kind of simple language, really what's going on for each one of the categories. And so each category of the financial statements is going to have some kind of notes that are going to refer to the details of what's going on in that. And so it's important. Now, if you got an audit committee, the audit committee should be reviewing the notes of the financial statements. But if you're serving on a board or whatever, you need to see the full accountant's report per se. You need to put your hands on the report. Please put your hands on the report. You need to look at the report in aggregate. You know what I want you to do. I want you to open up that cover. I want you to see what kind of report it is. I want you to look at those financial statements, and I want you to read the notes to the audit, okay? So that you can be familiar with your entity and what the auditor is telling you, what they've got to report and all of the above. And so that's what's important. It's not good enough for someone to tell you, oh, we've been audited and we've got a clean report. That's not good enough, okay? If you have responsibility for that entity, you need to see the report and read the report and have the opportunity to read the report, okay? And without that, you don't know. You don't know what the engagement was, okay? And you don't know what was produced. You need to see the report. I can't emphasize that. I can't emphasize that any more. Okay, now, that is actually the report. That's actually the audit report. I didn't kill you on it, because I'm not trying to like glaze you over so your eyes or whatever. And you have these. I said, you have them in your slides and all of the above. And I actually could have given you a full audit report to review, but you've got the pieces, so you know what's in there now. And so this is, now we're coming down to, I mentioned earlier that I have an alternative that I'd like for you to consider, basically. And here's the alternative. I realize that external audits are expensive, and many churches, I should say probably most churches, cannot afford to spend the money necessary to actually be able to secure an external auditor to do an audit. But actually, I'm going to submit to you that that may not actually be necessary for every entity. Nice to be audited at some point, but I'd like to encourage you to incorporate internal audit committees into your work at your church and at every entity that you're serving on the board for. And here's what I'm talking about with this internal audit committee. First of all, it doesn't cost you any money. Hopefully you've got people who are willing to do the work. And I actually I just submitted an article to the Christian Recorder about this, because I really want to encourage us to try to do this, because we need to have some type of audit oversight process at the local church all the way up through our church. There should be some type of ongoing audit work being done at every level of our organization. And we can do this as an internal audit committee without having to spend the money on it. An internal audit function can be more thorough than an external audit, because the people involved, are involved in that entity. They're involved already. And they basically can understand, they understand what's going on. And they're going to be able to do this work on a consistent basis. I think my article suggests that you do it twice a year. I have a template that I'd like for you to use to do this internal audit work, where I'm going to suggest the kind of things that you should be reviewing. This is something that can be done in a day or two, twice a year. But if you put it in place, you have the ability to now take care of things without having to spend a bunch of money on external audit. But you take care of things and address things as needed, basically as things go on. So it can be more thorough than external audit because the people are familiar with you, and they have more opportunity. They could do it quarterly. Twice a year, I think, is enough, but it can be quarterly. But I'd like to just put that out there. And it also is going to put in place a systematic review of transactions by an by a committee of individuals who are not processing the financial transactions. This internal audit committee should be made up of persons. It could be a subset of your stewardship and finance per se, but it should not be the persons who are directly responsible for reconciliations, not the people who are directly responsible for reporting and writing checks or putting checks in the system. None of those people should be on the internal audit committee. It should be other folks, ideally people who are not involved in stewardship and finance at all. Some of our sisters who've been at the church for 30 years that or one of our trustees or a couple of trustees who have been around, who know the church well and are very meticulous about certain things, who can actually come in and review certain things according to some guidelines per se, to help us be better at what we do internally. And if we can start incorporating these internal audit committees across our church, we can save money and reduce the money and the need for external audits. And I'm really talking about at the local church level. So that, because a lot of our local churches, because they don't have the money for an audit, they feel as though they're kind of left out. And that's not necessary. We can put in place things, and I can teach you how to put an internal audit committee together, and how to review the work that's being done inside of your ministry. And then also, an internal audit committee is a good place to field people for your Commission on Stewardship and Finance, new members. Have them start out on internal audit initially to get them familiar with what you do and how you do it. And then work them into ending up on stewardship and finance or taking various roles. We should constantly be training and teaching our people inside of our church to take on new roles, so that we can just kind of, keep developing the things that we need to develop. And so that's what I want to encourage you to do. As I said, I just wrote an article for the Christian Reporter about this particular thing. I would, love to train you. It's up to President McKeedy and Director Wright, if we could do a training on this idea of internal audit, to take you through the form that I think you should be doing and how to go about it. I would love to for us to start implementing that seriously, because the idea, as you see, the idea of audit and the CPA's role inside of the church, we surely have a role, and it's important that we come in as an external source to give, a separate look, but we've got to do some of our work on the inside. We've got to do that. And so here's my call to action. And that's pretty much the presentation. So it's 10:15. I'm feeling all excited because I'm on time. Yes, I am. And so here's the call to action, family. This is a very important, the idea of oversight is extremely critical to our Zion across the board. We're going to have to become much, much better at oversight across the board. And we've got to come out of the titles and all of the things that it sounds good, it feels good, but the bottom line is we've got to get the work done. We've got to pay more attention to what's going on. We can do this in love. We can surely do it in cooperation, but we must do it. There's no more excuses about what I don't know and what I didn't know and how I had no idea. That's dead. That's dead. No more time for that. I should say, ain't nobody got time for that. We don't. It's time for us to now step up. We need each other. We all have these gifts. There's so many wonderful gifts in this church. We have the gift to do it. We need to come together, draw on our gifts. We need to share. The Connection Organization, we're all about teaching and training. So we need to come together, teach, we need to train, we need to do all the things that need to be done so that we can be better at what we do. And so I'm encouraging you, brothers and sisters, as you leave out of here, I pray that you understand a little bit more about this than you did before. And I pray that I've motivated you to consider the idea of internal audit across the work that you're doing, so that we can be better internally, spend time with each other, love up on each other together. So this is our call to action. We need to get to work. No more just talking. We've got to get to work. We have the ability to do that. And so please, my brother and my sister, I'm calling you to action. Let's get to work. So it's time for questions. 10:16, I'm so excited with myself. Yes, I am. And so Alexandra, do you have any questions for me, my love?
Yes, questions are on their way.
Thank you, darling. And I see Director Wright has come back with me. And so you guys just feed them to me as you are getting them together. And thank you all so much for spending time with your sister today. Thank you so much.
So while she's categorizing the questions, some people have said over again, they would like to have just a copy of it emailed to them because they're having some concerns accessing the link, so that we can make that happen. We can certainly make that happen. But we'd ask that you continue to put them in the chat. But one of the questions, I'll go ahead and start, Alexandra, as you're trying to categorize them. I'll just ask the very first one, and then you could categorize the others as you. But there's a question that says, is there any responsibility to report audits to the IRS?
No, none whatsoever. None whatsoever. Is there a particular reason you're asking that question?
That question is from Warren Sherlock. So he can put his explanation in there, and we can move to another question as he contemplates that.
If you want to clarify that, I can give you more of an answer. No,
Alexandra, you want me to continue, or Ashley? One question is the presiding elders, well, it should be all the presiding elders, the auditor for the AME Church? Please explain their auditing methods.
I'm not sure of a presiding being an auditor. I don't think that they are auditors, or I don't even think that the discipline requires them to perform any role of that nature that I'm aware of. And so, Director Wright, if I'm missing something, please tell me. But
again, yes, that's from Mr. Frazier from the 7th. And so if Mr. Frazier could, if the response to your question is not what you were listening for, perhaps you can clarify that more in your chat, and we'll pick it up. Do churches generally use cash basis or actual, I'm sorry, let me read it again. Do churches generally use cash basis or accrual basis accounting?
Now, churches should be using, most churches they're comfortable with cash basis, but for accounting purposes, it should really be an accrual-based accounting where you're really, and when we're saying accrual-based at this point, we're talking about matching revenues with expenses. Okay, cash basis really is, whenever the dollars walk in the door, that's the month that they get recorded in per se. And whenever you pay the bills, that's the month that the bill gets recorded in. But in actuality, we should, when we're closing books for church, we should make sure that all the revenue that came in for that month and all the expenses that were incurred in that month get booked in that month. And and even though it may not sound like what people think of as accrual base, that really is what accrual base is. It's matching revenues and expenses with the period in which they were incurred or received. Whereas cash basis, as I said, it follows the money, but it is not, cash basis is not GAAP, okay? Accrual is GAAP. And so I would suggest that churches follow GAAP, if at all possible, for their internal reporting.
Let me remind people that it's just like putting in a chat, but go to the bottom of your screen, or on your screen, you'll see Q&A, and you can pop your question in there. And it's just as if you were just responding, you're trying to chat. Another question is, should the audit report be distributed to the membership?
And the membership of the church is I assume that you're asking.
Yes.
And so the answer is no, it should not be. It's because it really is not, as I said before, an audit report is not a public document. What's important is that the individuals that have responsibility for the authority over it should definitely review it. As I said, if you have an audit committee in place, or a committee of individuals who have reviewed the report, they have coordinated with the auditor, that should be good enough. But the audit report in and of itself is a private document, and it's not something that really belongs everywhere. Now, I will also say that you can go out on Google right now and find all kinds of audit reports for churches and others. You can choose to make your audit report public, but it is not required. So no, it should not necessarily be distributed to every member of the church. It should be distributed to the leadership team who's responsible for oversight, basically, and they should know what's in it, but not to the entire membership. That is something that's not required at all.
There are some, and you can do this before we leave, who are asking for your information so that they may contact you for further assistance, your contact information. There's a church that says they would love to have some assistance on setting up this internal audit process. But a question is, Should a pastor be writing or signing checks?
I would say probably not writing checks, ideally, but it depends on the size church and the individuals. There's plenty of pastors I've dealt with who had no one else that would help do anything per se. And so we have to think about what the situation is and who is willing to volunteer to get the work done. But ideally, that answer is no. The stewards have the responsibility for the finances of the church. There's a commission on stewardship and finance, so hopefully there is a financial secretary. Hopefully there's treasurers. Hopefully there's other individuals who should be taking on that responsibility. Now, signing checks is another story. It's important that the pastor is always aware of what's going out the door, what is being spent, and why it's being spent. That's important. It's not good to keep the pastor in the dark about what's the financial side of the church, because that has to do with the financial well-being of the church. But for signing checks, now, for example, and my pastor is a signer on the bank account, but she's never signed a check. So it's in, because there are other individuals in place. It's a matter of authority and respect to put the pastor possibly to be able to sign, but it's really not necessary, because the lay members of the church, the lay leadership, the stewardships, those are the ones who are responsible per the discipline for the financial transactions of the church. And so those lay members and lay leaders should be in place doing their jobs as they should, so that the pastor does not have to write checks or sign checks to take care of the work of the church.
I'm going to refer back to the question, remember, about the presiding elders being the auditor of the AAB church.
Yes.
Please explain the auditing. And so here's some further explanation of that, elaboration, should I say, of that question. It says the presiding elders, they come every 3 months to check on the church. Is that the same as checking on the finance and church growth? I would say, before you step into that the discipline prescribes and describes the process for the quarterly conference and what should be involved in that. But again, let me read it again so you may respond. It's not Pat Wright, it's it's you. And so, but they meaning the presiding elders come every 3 months to check on the church. Is that the same as checking on the finance and church growth? That's the question.
Okay, and it definitely is not. We all have, sat through quarterly conferences, as Director Wright just said. There's a prescribed process, prescribed set of questions, prescribed things that the elder is reviewing when he's there. But the elder, he or she, is there, but they are not in a position to go transactionally into reviewing the details of what's going on at the church. That is a time, if there's something going on, surely we should be discussing that with the elder. But it is not the job, nor could they do it. That's something that they could not even accomplish, considering the number of churches that they're going to have under their responsibility. So that is not the same, and it should not be considered the same as well. It should be a time for us to talk, to the elder about the things going on. But it's a responsibility, I'll go back to the lay leadership of the church to take care of the finances of the church.
Okay, another one, segueing back to the accrual question. If currently using cash basis, should it be changed to accrual at the beginning of the next fiscal year or before?
I would say that ideally, if we are mid-year right now, and so I think that's what your question is. Ideally, I think you can start changing it right now. Because ideally what I'd like to see ultimately is for you to end up at accrual basis by the end of the year, assuming that you're on a calendar year by December 31, have moved everything over to an accrual basis before you close out this fiscal year or this calendar year, whatever your year ends and starts with. But there's no reason why you cannot start right now and make any back corrections for this year that you can, in order to make sure that your reports are on accrual basis by the end of your reporting period.
Okay, I'm going back. When the pastor fills out a voucher, should it be verified by someone else?
Absolutely. I mean, every transaction that occurs in any entity should always have multiple individuals that are aware of it, someone that approves it, and then someone, of course, who disperses it as well, ideally. And so, yes, there is no transaction that should occur without someone else's authority and someone else's oversight. That's what the word oversight means. It means ensuring that nothing happens in a vacuum at all in any entity. Everything should have oversight, everything should have approvals, and everyone who transacts business in the church should have the right authority to do so. And that we should not do anything without some type of oversight. Definitely not. No one in the church.
How much financial detail should be shared with the congregation? What information would you definitely not recommend be shared?
That's an interesting question. I think, first of all, I think that and this is an excellent question because I hear it all the time. Pastors and other individuals who are afraid to share certain information because of whatever. I believe that it's important to share the financial statements with the official board. I really believe that. I believe that it's important, but in order to share it, you've got to, first of all, have good reports that are reliable and good reports that people can understand. They don't need to have every little detail, but they surely need to understand what you brought in, what you spent out, and how much money you got in the bank, because those are the three things that people really want to know. And there's no reason why we should not explain those things to our official board. It's their money. They gave it, or said it's the Lord's money now because they gave it, but they gave it, and they gave it from their hearts. And we didn't sell them a Gucci purse or a pair of Manolo shoes. They walked in the door and they gave it from their hearts. And so therefore, they surely have the right to sit in a meeting and come to the official board meeting in the proper manner, of course, and receive the reports for the church. So I do believe that the basic information should be shared with the church. And you said, what should not be shared? You know what? I would say what should not be shared is, and I've been doing this 30 plus years. Oh, I shouldn't say that because I'm only 25. But anywho, over the years, what should not be shared is too much detail. Sometimes we share too much detail and the meeting can go off the rails over one little thing that is not even material or meaningful because we got down to the weeds and people didn't understand the reason that we were in the weeds. That is not the best way to communicate financial information. We want to give people an idea. We want them to understand what's going on, but we don't want to be so deep in the weeds that they get lost in it and don't get the picture. We don't want to miss the forest for the trees. And so that's that I think if we go too far down in the weeds, that's the information we should not be shared. But other than that, I think that the members should know how much you have in the bank. I think they should know how much debt you have. I think they should know how you're paying down that debt, what your plans are. I think they should know how much money is going out the door for ministry and salaries and everything else. They have a right to know that because it is their funds that are supporting it.
So I think you pretty much segued into this next question, but I want to make sure that you feel that you've answered it. But it says that if the real objective of an audit is to reduce the risk that the stakeholders make wrong decisions, what can you say about the roles of the stewards, trustees, and heads of organizations? You segued about the knowledge of the people, but I just want to put that out there so you know that. That was a question.
And the question is about an audit report. It's talking about the after an audit has been conducted. Is that what the question is?
Yes, if the real objective of the audit is to reduce the risk that the stakeholders make wrong decisions, to reduce them making wrong decisions, right? Mm-hmm. What can you say, or what's the role of the stewards, trustees, and heads of organizations in that aspect?
You know, I think I want to disagree with the premise on the front end of that question, because I don't think that the purpose of an audit is to help management make decisions. That's really not where that information comes from. An audit is really to confirm information that you've already had, that it was correct. But what should happen, how you make decisions, is based on official board work that's being done on a monthly basis. It's the reporting that's coming out of the official board report, or if you're part of a board, the quarterly meetings you have or the semi-annual meetings you have to review your finances on an internal basis, that is where decision-making is made. And that is how it should be made. When it comes down to the audit is simply confirming what you should already know. And an audit should not provide you with anything new regarding how you make decisions than you already knew, because an audit is going to be very historical. You're going to be you're looking at an audit in September for financial statements that happened in December of the previous year. And so it's not meant to be a basis for decision making. It's meant to verify that the information that you made decisions on already was valid and correct. So I hope that addresses that question.
Then we acknowledge that there were some hands raised, but I'm going to ask Alexandra and Ashley to see if they can direct those raised hands to the chat, to the question and answer. If not, we'll circle back around. Here's a question that it talks about the 17th Episcopal District. It says, I know that most AME churches, especially in the 17th District, do not have policies where the CPA may base their judgment. Do you have any responses or assistance on how can an audit be conducted without the financial policies or HR manual?
That's a good question. Believe it or not, accountants are used to walking into situations where they don't have ideally the things that they'd like to have. And here's the responsibility of your accountant there in the 17th. If they walk in and you don't have policies and procedures, it's their responsibility to document your transactions and your policies and the things that you told them are occurring. It's going to cost you more money in that audit because they're having to create something for their work papers in order to guide them through your transactions. But it is their responsibility to create that pathway for themselves if it is not available to them. They'll do that through interviews. They're going to talk to the individuals responsible for financial management and those around them, and they're going to gather information. And then they're going to take that information, put together what they believe are your transaction policies and procedures, and then they're going to verify if you're following what you said you are doing. And so, yes, it's going to cost you more money, but that is what they should be doing in order to lay that groundwork to be able to provide you with an audit based on your policies and procedures. So that was an excellent question, because that is our responsibility. And I hadn't mentioned anything about that, but that was a great question. And that's not, I don't know whether that's a brother or a sister from the 17th, but that is not atypical. There's a lot of churches all over the place that the auditor is going to walk in the door and there's not going to be any policies and procedures whatsoever. They'll have to define that for themselves. So don't feel bad about that. That's pretty typical, but the auditor can handle that for you.
Speaking of procedures, our next question speaks to that. Regarding following procedures, my screen just moved. Here we go. Regarding following procedures, please expound upon how members should respond to bullying from pastors regarding how finances are handled. For example, where vouchers are concerned, shouldn't the pastor be required to submit a voucher?
I did kind of go here already. And this idea of bullying and all of that, I pray that does not occur. That's all I can say about that. Because as I said, there is no one in the church, and this is per your discipline, that has the authority to spend money without any oversight. You will see also that the official board is the only entity in the church that has the authority to actually spend money. They spend money and they are the ones who approve the budget as well. Other than that, everyone else in the church should be following the guidelines that are laid out in the approved budget. But no one has the authority to spend money. So yes, there should be vouchers submitted for any check that is written out to anyone. Keep in mind, when you're writing out checks to your pastor is an employee of your church. So therefore, monies paid to a pastor or any other employee, it may be taxable income. And so surely you have the responsibility of accounting for that, getting proper approval for that, and it needs to fall within the pastor's compensation agreement and guidelines, or their travel policies and whatever you have agreed to refund or reimburse or to compensate. There should be guidelines in place for that. And then there should be procedures in place to carry out what you have promised that you would do, and the things that you would carry out, and to approve those things, basically. There should be someone submitting vouchers for the pastor. If you have a pro tem, your financial secretary, that should be a cooperative process that goes along in order to ensure that the proper documentation for, because sometimes the pastor's too busy to do all of that and put the paperwork together, but that's why there's support people around to assist, to make sure that the paperwork is done properly and that the documentation is maintained. You do not want to go through an audit, surely not with me, if you do not have the correct documentation for the money that you spend, and especially for employees, because that's not what we do. Okay, so I'm sorry, I almost started preaching on that one, so I'm done now. I gotta look at it. We got switch going on.
Wow, wow. How many members do you recommend on the internal audit committee? And is this an annual appointment, or when should the committee be changed?
Thank you for asking me a question about that internal audit committee. You know, I'm all excited about that because I think we should be doing that. But yes, internal audit committee, my little article is coming out soon, but 3 or more persons, okay, ideally. But it could, honestly, it could be as little as 2 persons, because it's really, they're just doing some verifications. So it doesn't have to even be, there shouldn't, reduce, the odd numbers, because, we want there to be a vote or somebody to be a carry vote, but it's not even that serious. 2 committed individuals. I'm recommending in my article that they be appointed by the official board from the official board, basically not involved in the finances, but active. They need to be active members who are involved in the church, who are committed to do the work. 2 to 3 members. They should, and it depends. I would say maybe a 3-year appointment, possibly. I do think that they should do it more than 1 cycle. They should be around to kind of understand it, get a little bit, but maybe 3 cycles per se, and then you rotate people off. It's going to be wonderful for your church to rotate this committee, because that will give more people exposure to the details and give them some responsibility as well. And so something of that nature, but we can talk about that more as we move forward, but that's kind of what I'm thinking. But I would love to see your church implement an internal audit committee.
You mentioned that that's coming out in your next article, so we would have the people to know that Sister Cynthia Gordon-Floyd is a regular contributor to the Christian Recorder, and that you have a column or an article in there on a frequent basis.
Thomas is very nice to me.
Yes, ma'am. Yes, ma'am. Thankful to him. Thankful to him. Another question is, can you explain briefly the differences in responsibilities between financial secretary and the lead person on the stewardship and finance in the audit process, or are they the same?
That's actually, and it depends. The lead person, I believe, per discipline on stewardship and finance is the financial secretary. That's the title of what that person is. And that person is actually the co-chair, because the pastor is the co-chair or the chair of stewardship and finance. And so that person is really the same person, should be the same person. Now, you may have a treasurer as well. The treasurer is usually the one responsible for, getting the money to the bank, making the deposits and those types of things. But the financial secretary, and that's my title at my church, financial secretary / CFO, because as we're dealing with our banks, they like that CFO title per se. But we take full and overall responsibility for the financial responsibility of the church. And we are the ones basically that are leading the commission on stewardship and finance. So I think that lead person and the finance secretary, really per our discipline, should be the same person.
Should the fiscal year be calendar or conference?
You know, that's a great question. I think there's so many churches that are on a conference year. The problem is that the conferences move. And I've always thought that that was a bit odd. I think that it's easier to budget and to have a fluid budgeting process, basically where your organizational heads are involved and that they're submitting their budgets and they're being trained about budgeting. I think it's easier to do that on a calendar year basis because it's more intuitive for all of us. It's just natural for us to feel that beginning and end. But I know a lot of churches do it on conference years, but I'm just not sure of the purpose of that, because when it comes down to it, it's the lay persons who are really responsible for continuing the mission and the work of the church as a pastor comes and goes or is appointed or whatever. And so the fact that a new pastor arrives does not necessarily mean that there should be a new budget. I believe that the church should be operating fluidly all the time in a very consistent manner. Give the pastor a chance to arrive, get their feet wet, see what's going on. I have so many churches that I've run into that were waiting on the new pastor to come in to help them get the budget done and help them get everything done. That's too much pressure, I think. I think that we as lay persons and lay leaders have to do the work ourselves, keep the church running. We're the ones who've been there for 30 years, not the pastor. And we keep the church running, and then the pastors come and go as the bishop assigns. And we let that pastor walk into a functioning, operating church when they come in, and we keep it rolling. So I think that calendar year is far more intuitive, but I don't think it matters one way or the other if it works for your church. If it makes sense for you, then so be it. I just do not believe that a church's financial management and operation should be tied to annual conference coming and going, because we have our quarterly conference reports, and a lot of times people have done this conference year because of the quarterly conference reports, how the quarterly conference reporting is the same 3-month period of time leading up to the conference. They always say, and so we said, we need to make sure we got 4 quarters into the fiscal year. But the truth of the matter is we can report any months at any time. We don't need to design our entire church around quarterly conference reporting requirements. We can just take 3 months and put it together and give it to the elder, 3 more months and put it together and give it to the elder. But that should not dictate how we actually manage the
We're gonna take a few more, got 10 more minutes to take a few more. And so having expressed the importance of closer oversight to create consistency, the question is, should the discipline state such practice?
I think it should. I think that this is a time in the life of the church where we should be submitting changes and to the discipline to help us become more compliant and to help us take care of the things that we have found have been missing in our written oversight and written responsibility. So yes, I do believe that we should be working with our legislation committees to submit those things that we feel should be changed in our discipline to help us become better at what we do.
How many persons at a local church should sign the church's check?
The best practice is always 2 persons. I don't think that 1 person is good enough, but also the time has come where we're now moving more to, we can do bill pays per se, where nobody's signing a check at all. It's kind of going out from the bank. So what we do is we put into place the internal control processes so that we still have multiple approvals. And so if you're going to have a hard check, there should be 2 names on there. I want you to know that the bank does not enforce that. Okay. If you want 2 names, you can put 2 names and all of that, but the bank it's only 1 signature, and that check will go through. So it's up to you to basically make sure that if your policies and procedures say that there should be 2 signatures, that you make sure that that happens. But I do think that no check really should be expended without 2 persons of authority knowing that it's going out the door. Nothing should be going out. Like I said, no one person in any entity should have the authority to do anything, in my opinion. We all need oversight. We all do. And we need to work together, as I said, in love to approve and to do the things that need to be done.
Please
Hope that
discuss, I'm sorry, please discuss
I just-
the issuance of 1099s.
Okay. 1099 should be going out to every person that is doing business with the church. Did I say that? I did. That's the requirement. The real requirement is that anyone who we give more than $600 in a year, we should be submitting a 1099 to those individuals, every one of them. And so that is all of our guest ministers who come in to preach. That is the janitor. That is and if the janitor may be an employee, that is the landscape guy. That is the person who came to fix the furnace or came in to repair something. We should get a W-9 from those individuals. They need to give us their tax ID information, and we need to, if we pay them more than $600, we need to send them a 1099. That is a requirement annually that we do so. IRS requires very little from churches, and so we should never whine about having to do 1099s. Every person.
There are a couple of questions in here that speak to disciplinary policies and practices and how do we get things in the discipline, but I'm going to lump, these are two big long ones, but they kind of fit together. See if you can understand what I'm trying to say. So one question is, and they're similar, how do we proceed with implementing financial policy when pastors say they are over everything? Example, when it comes to them having to turn in receipts or completing vouchers, the pastor is above the law. Another one is, what can you do to recommend control measures of segregation between the finance committee and those in church administration charged with handling cash and disbursement? Overall, it's just talking about policies and procedures. What can you do? What can we do to implement those kinds of things?
Yeah, that's it's a hard thing to deal with when we want to. We cannot exist in a dictatorial environment. And I get in trouble all the time, but that's what I do. We can't do that. It is very, very important. As I said, oversight is important, and this is a call to action, because as we see, there's all types of detrimental consequences for a lack of oversight. And so it's time for us to not give in to the bullying per se, because it's not in the best interest of the church. See, while we are deciding whether we will acquiesce, while we're deciding that, people are walking out the door because they're tired of us. They see that we're not taking care of our business. They see that we stick our heads in the sand about things that we should be speaking out about. And instead of telling us that they're sick of us, they just take their toys and they go home. And we're seeing our churches empty out because we are not taking care of the basics. Oversight is a basic responsibility. A basic responsibility. It's what we do in order to allow the ministry to go forward. We shouldn't be begging for money from the pulpit. We shouldn't be doing we should be encouraging giving sacrificially. We should be encouraging tithing. We should be encouraging true stewardship in our churches. And then when people are willing to give, then we on the financial side need to handle what we receive with the love of God and with the integrity that we should handle it with. And that means that we should not allow anybody to dictate what happens with the money. We have a mandate. We are here to, we're trying to reach lost souls. We're trying to take care of the hungry. We're trying to, clothe the naked. We're trying to do the things. We're trying to deal with those who have mental health issues and all the things that we're called to do. We don't have the time to fight the battles about authority and all of that. We simply need to be about the business. But we can't be about the business if we don't do the work of oversight. and we don't do the work of putting policies and procedures in place to make sure that how we handle ourselves and conduct ourselves, if we don't do that, that basically we kill the ministry from our lack of oversight. And that's why I'm calling you to action. We have to do better than we've done. We have to.
I'm going to try to group together a couple more questions, and then we have to stop and give way to our president to make remarks. And let me just say, one of the questions is about the legislative process. How do you submit changes? If you go to the website for the Connectional Lay Organization, there's an explanation and a timeline there for submitting legislation, but it doesn't start at the connectional level. You have to go to your local lay president, go to your annual conference lay president, and then your Episcopal lay president. There's a process there and a timeline for submitting legislation. It just doesn't happen. There is a template that has to be used. Then it has to go through several steps for submission. But I'd ask you to start talking about it so that you can galvanize some following, galvanize some people who are of the like mind, and then you submit legislation for things to happen and change. It just doesn't happen. So with that being said, here are a couple of questions that people have, mainly about the pastor and the procedures and the church. And some of the answers can be found right in your discipline in a section on the roles and responsibilities of the official board and the different conferences we have, in particular the church conference. Much starts there at the church conference. But here's the question. I'm going to put a couple together for you. Should the pastor be the one to approve vouchers? And another one is, yearly when it comes time to updating the pastor's package, such as his salary, this should still be approved for the official board, not just the steward board. How about church conference? And should the pastor be able to request reports from members giving? So there are lots of questions there that center around the pastor and his or her role. And I just, if in a nutshell kind of way, could you speak to that and what they're talking about?
Right. I think I got it. There is, we have all kinds of responsibilities when it comes down to providing information, as I said, to the pastor. Giving records, the pastor can see absolutely giving records that there may be a reason to see those. There may be, there may not be, but that's not an unreasonable request per se. When it comes down to, Pat, I think I might have missed some of that, but when it comes down to just how we operate per se with our leadership, the work with the pastor, we should be working in cooperation with the pastor. It should not be adversarial. It should not be dictatorial, but it surely should not be adversarial. We are hopefully on the same page, on the same mission. But what we have to do is we have to find a way, because we don't need to be preacher fighters, and we don't need to be in conflict. That's not what God requires of us. It's just not. We have to find a way to be accountable without being in conflict. But that also means that we have to be willing to accept oversight. And that requires all of us being willing to accept oversight. And it's not easy. Sometimes you work so hard, you do so much, and then somebody now wants to question what you did or whatever. It's not pleasant, but it's necessary. Because every time we are questioning things, what we're doing is we are protecting that person. Because now that you have, you can't be accused of something if there's two other people involved in the process. But if it's only you, then more than likely you're going down, because when it comes down to someone getting angry or wanting to question something, they're going to blame you. And since your hand was the only hand that touched it, there's no way for you not to be blamed. And so we have to look at oversight as the way to protect each other, to love each other, and to do things in a decent and orderly manner. And so I know it's not easy sometimes. And sometimes I know that pastors feel that lay leaders try to take their authority away. They're not able to run the church the way that they think they should. But we have to work on how we work together. We do. We have to find a way to work together. Because the truth of the matter is no one person has the answers anyway. We need each other. That's the way the church is going to run at its best, is if we're working together. So we have to institute oversight one way or the other. And we may be kicking and screaming, but we have to do it. Family, we have to do it. That is the call to action today. We have to do it.
Thank you very much. And one question finally, I'll try to respond. When the church is small, are there any other persons? My screen just changed. I guess they're asking about is there any persons to work with on legislative procedures? And I would say yes. Go to your if you have a district of the annual conference, go to that meeting or your annual conference lay meeting. Bring it up on the floor. There should be a committee at each level that speaks to legislation. And then you get together and you propose that, and then you explain it, and then get some people to present that and push it forward. Because you, as a small church, may have the same idea as another small church or even a larger church. And together, as our presenter just spoke about, that's where the power is. And so if you're thinking about it, chances are someone else is too. And we put those ideas together, come present them to the legislative committee that's on your level, and then they will move from level to level and finally make it to a place. Now, I will say this to you. We've had lots of legislation that was proposed. Do not be discouraged. At our last general conference, there were over 300 pieces proposed. There were 155 pieces that came to the revisions committee. Of the revisions committee, there were 9 that hit the floor. Of the 9 that hit the floor, 7 passed. So don't be discouraged, submit and resubmit. Madam Presenter, I think that our time is running out. And so Miss Alexandra, I'll turn back to you to present, if you will. President McKeety is on the line for remarks.
And actually, Pat, before we go there, I do want to, my final thing is I want to invite you all to join me at Turner Theological Seminary. We are going to build, I'd like to build an army. We need to gather together to instruct, work together, and then we need to fan ourselves out to our local churches and help them become better. I need clones. I really do. And it's so important that we get trained. See, we perish from lack of knowledge. We've got to come together, get trained, come together, collaborate, and then fan out to our church and do all that we can. So join me. Come over to Turner Theological Seminary and earn your certificate in church financial management. It's going to be it's an 8-month class. Okay, you're not going to get the certificate easy, but we're going to teach you everything that I can about church financial management. This is actually a 2-certificate course, but the first certificate is going to give you the overview, and the second certificate, you're going to be ready to go out and teach and train. So we need to get more people versed in the things that we've talked about today, so that we're ready to go out and do what the church needs. So join me at Turner Theological Seminary for my class. I look forward to seeing you. Yes, I do. Yes, I do.
Cynthia, they really want your information. They want your contact information in the chat. They also want to know if this will be available, this video recording will be available, or all the handouts can be sent someplace or put in a repository that they can access. And yes. And so those are the questions that are burning on their minds now.
Okay, well, Alexandra, will you put my email address in the chat box, please? And my website is willingsteward.com, willingsteward.com. And so feel free to hit me up there. You can book an appointment so we can talk for a few minutes if there's something that you need, but that's how to reach me. And yes, all the things that and I have your email address if you register for this class, and we will send out all of the documentation to your email addresses, and that will happen by the end of the day today. And so definitely, if there's anything else, and the recording, I'm not sure really how to make that available, but we'll talk about it and we'll try to figure out how to do that as well. Work with Director Wright on that to decide how best to do that. But definitely you will get all of the attachments today. And so, Director Wright, you may need to introduce President
That's
McKinney, because I'm
fine,
not
that's
sure.
fine. We're right on our time, and so we thank our panelists, Ashley Blakely for helping us out with tech, and also Alexandra Lang for helping us out with tech. And now, Mr. President, you stand between the audience and their dismissal. President Makiti, Matakan Abednego Makiti, who's traveling to the general board, but I believe he's on and listening. President Makiti? Okay. He popped in, and so he is traveling, but he did call in. And so when you see him in Atlanta in the next couple of days, or send him a chat and say, oh, there you are. Yes, sir.
Get your video on, sir.
I'm almost at the hotel lobby.
Oh, you're walking.
And listening to this wonderful presentation. I would like to thank everybody who actually joined in to listen to this wonderful presentation. And I believe that you have gained a lot, and we need such presentations moving forward. Thank you very much for coming through. The questions that you posed to Sister Cynthia Gordon-Floyd actually made the presentation to be much more better than it is. Thank you, Sister Gordon-Floyd, for the wonderful presentation. And I see from the comments that they liked it quite a lot, and I really did too. Director of Activities, thank you, my sister, for being there for us all the time, for conducting this type of for being the person who is facilitating this thing. We thank you wholeheartedly, and your team that is making things happen there. Thank you to everybody. May the good Lord be with you and protect you. Thank you very much. I'm taking it back to you, Director Wright.
Thank you, sir. Thank you, sir. And get yourself settled in your room, and we'll see you in a couple of days. But Madam Cynthia Gordon, is there anything you want to share?
No, ma'am. That is that's everything for today. And I hope everyone went into the chat box. And thank you so much, President McKinney. And thank you again, Director Wright, for your help and everything that you've done. God bless your sister. We appreciate you.
And we thank you, each of you, for coming and spending your Saturday, either morning or afternoon or evening with us. We appreciate you, and go and have the rest of a great day. May God bless us with the true spirit of Christianity, that we may live together, not as man over man, but as lay persons working with God. Be blessed.
Bye-bye.